Timing the market is very, very difficult. That's why, the best advice is if you're not in the market, get in it now. I mean, staying on the sidelines, nothing happens. So it's always a good time to buy.
Hey folks, this is Thaddeus on the Be Nice Individuals podcast, which is hosted here at the Flagler Voice Podcast Studio. I have Steve Verrier. I'm certain I got it right that time. I was asking you how to pronounce your name, and I had to have him pronounce it like 2 or 3 times. But I like the name. It's a cool name. He is from A&E Lending. And we're going to talk about it. It's a mortgage company, and obviously he's getting very excited because I just heard today, actually earlier, that the interest rates dropped like 0.5 or half of whatever percentage or something like that. So are you excited, Steve?
I'm always excited. I'm in the business of high finance. How can you not be excited working with people's finances, helping them, guide them through one of the most largest purchases that they will go through in their life, or financial transaction they'll go through in their life. So definitely, the blood pressure runs high a lot. As a result. So yeah, I'm always excited about this industry.
Yeah.
So, but a couple of things you mentioned in your introduction, I just want to catch on before you start going into your specialty, which is pulling information out of
I got to pull it out of you.
Right. But you mentioned the Fed's dropped interest rates a half a point, just so you know, that does not translate directly to a half a point mortgage rate interest cut, because the rates they control are the overnight borrowing rates that banks pay each other or that they pay to the Fed.
Now, if I understand correctly, it's more like a trickle effect or something like that. You do something over here, and now people still get excited, or it helps kind of the overall economy, so to speak.
It is a trickle effect, but what a lot of people also don't realize is that the market acts, proactively before the rate cut. If they know a rate cut is going to happen, so over the last 3 weeks, we have seen rates come down half a point.
Nice.
Over the last 3 weeks.
So you already saw it.
So they already came down, and we call it they baked it into the market already. They baked the rate cut into the market.
Nice.
So people expecting rates to drop now a half a point might be disappointed.
Sure.
It's not really going to occur like that. In fact, looking at the market open this morning, we've actually lost some of the gains we had over the last week. We've lost.
This is a downer.
Right. Right.
Yeah.
So, but the market is still digesting the news. We will, we got to wait for the dust to settle and then see how they absorb the news and what happens with the market. Yeah. Of course, we are expecting, based on what the pundits, people who live in the market, live on Wall Street and monitor those things, they come out and they send us daily, weekly emails, what they expect to happen in the market. And that's how we judge whether we want to lock a loan in, an interest rate in or not. But they kind of give us the information, and they are saying, look, if you've got loans closing in October, you'd be silly to lock those right now.
Okay.
You'd be silly because there's no way that rates aren't going to keep declining as we get closer to the election, because that's election strategy. Yeah. For usually the administration that's currently in power, they want people's finances to improve and outlooks to improve prior to the election.
Oh yeah, that's just a given, because they'll be like, "Look at what I did."
Right. I'm not saying it results in election interference, but it happens. Yeah. It happens.
Yeah.
So, but hopefully we can get a handle on inflation and maybe start opening up Anwar, getting pipelines going and stuff, because the cost of energy, I think, is the top of the pyramid, which starts that trickle down effect.
Oh yeah, interesting.
Yes.
I did not know that. So. Speaking
everything requires energy.
Yeah.
Everything requires energy. So, and if we're paying more for energy, as a result, we're going to pay more for everything else.
Yeah. That's interesting, because actually I have a love of solar, and solar in general is cheaper than like gas and stuff like that. So, but that's a different topic for another day.
Right. Unless you're getting a lien for solar panels on your house, then that comes into play.
Yeah. So one of the things that I know happens, it's kind of a phenomenon though, is when buyers just get the news of the rate drop, I feel like they're going to go and start shopping. And are you guys starting to see that? Like people are, the rates are dropping, and have they started, so to speak?
Well, it's going to stimulate a lot of activity because on one hand, you have sellers that may be in 2% interest rates or, under 3% interest rates because they bought 6, 7 years ago, 8 years ago, and they're hesitant to sell their house and then acquire, lose that interest rate and of course have to take on a higher interest rate mortgage now to buy a new home. So you have sellers that are hesitant to get into the market, and you have buyers that are hesitant to get into the market because they're hearing that rates are going to come down. So if we hold off a little bit, we can, get a lower interest rate. But if you turn into a buyer's market, that usually stimulates an increase in house prices.
Yeah, so we're going to be going backwards kind of.
It's a give and take. Timing the market is very, very difficult. That's why, the best advice is if you're not in the market, get in it now. I mean, staying on the sidelines, nothing happens. So it's always a good time to buy.
Yeah, I hear that a lot from different mortgage professionals or realtors, that sort of thing. So, kind of show the big picture of this. So, when we sold our house, which was a couple years ago, people were buying without inspections. And I don't think it'll go back to that point fully. But what you're saying is when these interest rates come down, correct me if I'm wrong, but when these interest rates go down, now people can afford it. And now you're going to have more buyers in the market.
More demand.
Exactly. More competition.
Yep. And if we're not keeping up with supply, the law of supply and demand, obviously, low supply, high demand, people are going to pay higher prices. So
you're saying to people, don't sit around and wait for the interest rates to drop. Go ahead and call you now. I mean, for you, is it good when the interest rates drop? That means you'll have more customers? Like, how does it work for you?
Well, definitely we saw a decline in applications across the industry nationwide.
Sure.
Different geographic locations have different markets, of course. There's specialization inside markets. In fact, the market you're in affects the interest rate you're offered.
Oh, yeah.
Interest rates are different across the country in different markets. Your zip code is one of the asterisk items when we're pricing out a loan scenario at one of our lenders, and they're nationwide lenders. They lend usually in more states than one. Most of them are 20 plus states that they lend in. So we have to tell them what state we're in, and just changing the state, you will see a different result in your pricing. So there's like 8 or 9 factors that are asterisks that you have to enter into the pricing engine. So a lot of people don't realize they call you, hey, what are the interest rates today? It's like, whoa. I need a better idea of the scenario to quote an interest rate. It's not just what's your credit score or what's the loan to value, which is opposite of down payment. So, there's a bunch of different factors that go into it. Obviously, there's income considerations that come into play. Because obviously if you have, if your income is, 80% or less of median incomes in the area, then you qualify for different loan programs that have lower incentivized interest rates. Home ready, home possible programs are out there. And those are all, household income driven. So we have to look at that stuff as well. But the main thing getting in the market is that you're divorcing your landlord. Realtors, there's a saying, you date your rate, you marry the house, you date your rate.
I was just going to say that.
And you divorce your landlord. But the key is divorcing the landlord. No offense to landlords out there, because I have friends who are landlords, and they're and that's their business. They don't work anymore. They manage houses and collect rents. But because they've learned home ownership is the first step to building generational wealth for you and your family. Because again, property, God's not making any more of it.
That's true.
And the land is here. So, I hate to say it because I also have a degree in wildlife biology. That's what I grew up. I was intending to work out in the woods.
Interesting.
I love the wildlife. I love biodiversity. I love it. And nothing pains me more than when I see a lot getting cleared.
Yeah.
And I'm just like, where are all those animals going?
They can go to your house.
And they do. We see them out the window. Hey, there goes a bobcat right out the window.
And now you see the deer in the neighborhood.
Oh, absolutely, eating our plants, everything. But so so it's a catch-22 for me because, of course, my career is based on housing.
Sure.
And I like to see more of it, but it also has to be controlled growth.
Sure.
So.
Yeah, and that's the thing is like. You can't stop growth necessarily because people are still flooding to Florida apparently, and so just kind of balancing things. But that's life in general. You have to balance things. Yeah, it's hard to kind of push against something that's obviously happening.
No, that's what I'm saying. The market slowed, but deals were still going on. I might not have captured as many of them that I normally would have in a lower rate environment. Because again, there's less fish in the pool.
Yeah,
so to speak. Less fish in the pond. Let fish being buyers. Yeah. No offense, buyers. I'm not just calling you all fish. I'm just using the analogy.
Everybody loves fish.
Right? Yeah.
Now, for you though, let me understand mortgages a little bit. So, is the interest rate, is that better for you guys, or would you rather lend the higher price when it's a seller's market? What market is better for a mortgage company, or is there one?
There isn't. I think a lower rate environment is better because there's more opportunities being generated.
Sure.
Less people staying on the fence. So if I had to answer the question, because like I said, we do business regardless.
Yeah.
Transactions are being done one way or the other. People get divorced. They have to refinance. As much as people would like to wait, sometimes there's just scenarios where they have to make a move now.
Sure.
But
so seller's market. Is that what I'm hearing?
Well, when rates are coming down, it's difficult to say to people, you got to do something now. We have lenders pushing us right now. You should be refinancing people that you closed a loan on 7 months ago. They're eligible now to drop their rate 1 point. And I'm like, 6 months from now, it might be 2 points.
Right.
And what am I going to do? Call them 6 months from now and say, "Hey, I know we just did something, but let's do it again."
I mean,
so I have to gauge that because we don't want to churn people. There has to be tangible net benefits to doing a loan with someone.
Sure.
If you do too many of those, that eventually, the Consumer Financial Protection Bureau will be looking at you like, "Oh, why did you refinance this guy 3 times in 2 years?"
They'll come knock at the door.
Yeah.
So you have it almost sounds like you have somewhat of a fiduciary duty. Is that accurate?
Absolutely.
Yeah. Tell me more about that.
Absolutely. I mean, that's why we're licensed. And we have to do 8 hours of continuing education every year, learning about, making sure we're staying abreast of different laws, and staying within the guidelines so that we're remaining compliant.
Yeah.
No one wants to lose their license to do business over one transaction, one paycheck.
Sure.
So you have to really be responsible in what you're doing and make sure there's tangible net benefit to your client.
Yeah.
So, and for me, it's also a tricky situation as well because we have 2 sets of clients. We have our referring partners where we're, trying to get business from. Unfortunately, until there's some correction in people's mindsets, the average young couple says, "Hey, honey, let's buy a house." First thing they do is go talk to a realtor, and then usually the realtor ends up sending them to a mortgage professional that they're comfortable working with.
Sure.
So, we have a subset of clientele, our referring partners that send us business. We want to keep them happy, but then once you're inside the transaction, it's like, I don't work for you. I work for this person.
Sure.
Now.
Sure.
So you have to weigh that accordingly in the transaction.
So do you think people should shop for you first and then find a realtor?
If unless you're paying cash for a house and you need financing, you should always be talking to your finance professional first.
Yeah.
Before, who wants to go out shopping for a home, fall in love with a house that's $400,000 and then go talk to your mortgage person and realize your market is $325.
Yeah. That would suck.
Now you're looking at a whole different market, but you can't get that $400,000 house out of your mind.
Yeah.
You know, so you don't you want to know what your budget is. You want to know what exactly is available to you before you go shopping and actual looking around, I think.
I feel like that's kind of flipping the industry on its head, which is good in a good way. But I feel like so many people just go house shopping first and then roll the dice.
First thing you think, real estate, realtor.
Yeah.
We want to buy real estate. Let's talk to a realtor. Now, let's talk to our finance guy and see what shape we're in to buy a house.
Yeah.
So, definitely they should be talking to us. And, of course, then you have a pre-approval letter, and you can go in with confidence to the realtor, and the realtor can then go with confidence to the seller or the seller's agent and say, I have strong, qualified, pre-approved borrowers or buyers.
Well, that's fantastic. Hey, Steve, would you shout out your contact information so people know how to contact you? Specifically those people who are thinking about house shopping. Contact your mortgage pro first so you know how much money you can borrow so you're not shopping maybe in a category you shouldn't be in, or maybe you can shop in that category that you didn't know. So shout out your information, Steve.
Well, I have 2 different phone numbers that people can reach me at because actually, I've been doing this for over 30 years. Yeah. So I remember the days of long distance. When I moved to Florida, I was first up in Jacksonville area. So my cell phone was 904-514-8884, and it still is today. Yeah. But then when I came down to Flagler County here, we were 386. So I got a Google Voice line 386-866-1112. Yeah. That people can reach me at locally, and that forwards to my cell phone. Yeah. I am online at thefloridamortgagecenter.com. So that, no matter where I go, if I end up changing agencies and I'm no longer with A&E Lending, people can always find me at thefloridamortgagecenter.com. A&E Lending is a small brokerage out of Jacksonville. We're over at the corner of Atlantic Boulevard in San Pablo. That's the main office. But, I cover this remote area down here in Flagler County. And most of my business and my marketing is, from lighthouse to lighthouse, from St. Augustine Lighthouse to Daytona Beach Lighthouse.
Oh, cool.
West out to Palatka. I do Ocala, those areas as well. So, but we're licensed in the entire state of Florida.
That's awesome. Yeah. Yeah. So folks out there, make sure you guys reach out to Steve Verrier. He's with A&E Lending. Now, when you're in the market to buy a home, you can start with a realtor, but as we learned from Steve, it might be a better option to start with the lender so you can actually figure out how much cash you have in your pocket, so to speak, before you just go shopping for houses.
That's right.
That way you don't have any disappointment, or maybe you might have more cash in your pocket than you thought, so to speak. So make sure you guys reach out to Steve if you're in the market and you're thinking about buying that house. Now's a good time. Like Steve said, anytime's a good time to get into the market and actually get a property you can call your own, divorce your landlord. But this has been Thaddeus on the Be Nice Individuals podcast, which has been hosted here at the Flagler Voice Podcast Studio. Remember, folks, this is a space people can come in and rent out time. If you're a business owner, you're an individual, want to shout out your ideas, or maybe you want to shout out your business, this is a space for you. If you're a political candidate that wants to reach your audience in a more transparent way, we actually have call-in features here to make that possible. Again, this has been Thaddeus on the Be Nice Individuals podcast. We'll see you next time.